good, everybody? Welcome to the Closing Beat. Happy Thursday. Hope you're having a good day today. We are sort of making a few adjustments around here, so just getting things set up. Hey, if you're one of our customers tonight, we're doing Wine and Wealth. That is going to be at 8 o'clock. You already have the email in your inbox there. We're going to talk about how to buy a falling stock, which is sort of appropriate for the way the markets have been moving lately. We are going to talk about the 3 different ways that you can look to buy positions, stocks, exchange-traded funds, mutual funds, whatever it is, while the price is declining. How do you know when you can sort of find a bottom, or how do you know which area is the best to look at? If you're thinking you want to buy bank stocks, how do you know which ones to buy? If you're looking to buy retail or buy the market in general, how do you kind of know when prices are falling? Sort of a fitting class, because we have markets falling. So we got a lot of things falling right now, and a lot of you are used to buying on the way up. Now that we have to look at things a little differently, we're going to cover that class. That's for our active traders. We are not active traders here at Jazz Wealth. We're long-term investors. We manage your retirement accounts, your 401k rollovers. We help you with financial advice along the way through the use of some of these classes like we do. We call it Wine and Wealth, and so that'll be tonight at 8 o'clock. If you want to be a part of that, then hopefully you'll consider us here at Jazz Wealth. Also, all the events, the classes we have coming up, are on the websites under events there. Okay, let's talk about the stock market today. Off here to your right, you can see the stock market a bit mixed. Now, yesterday we had the comments of, do you really buy what's going on in the markets? We were talking about how if the markets finish lower today or even open lower, that you really wouldn't care, right? It sort of felt like this was going to be a lower day. I still feel that way. So if you're looking at the stock market and thinking, yay, we're going to bounce into Christmas, let's get through the Fed meeting first. So next week we have the Federal Reserve meeting. Nobody really cares whether they raise rates or not. Everybody's going to look at their what are they going to do going forward into next year. So any sort of language that hints at them adjusting their plan or getting to neutral, what is neutral? Are we there yet? Are we one rate hike away? And so that's going to be the real catalyst that could potentially get this market higher if that's what happens. So between now and then, you kind of see the bears are in control. There's a sort of sell first and then figure it out later mentality. You don't have people, like we said yesterday, you don't have people buying when the markets fall. You can kind of see on the chart over there to your right, as the markets fall, the bounces are being used to sell a little bit more, and that's a big difference here. So you got the Dow higher by 70 today, sort of towards the end of the day. It did that. The S&P was flat. You could have stayed home today. Nothing really happened there. And the Nasdaq lost 27 on the day. Now, here's the thing. We got some clarity on what the Fed might do, or at least we're starting to get a little assumption of what's going on there. We've got some clarity on trade, what's going on between the U.S. and China, although there's a lot of political BS going back and forth. If you strip those guys out of the equation and you look at the real progress that's being made there, progress is probably a tough word. If you look at the actions being taken there, whether you think it's just a lot of the same as usual from China, they're really crafty at like saying they're doing something new, but really just sort of wiping off the title and putting a new name on it. But either way, we're getting clarity on what's going on there. There's also some consistency here in the United States. We also have some clarity on OPEC, their cuts, what they've decided to do. You saw the price of oil today. We'll go over that in a minute. But even though there's all that clarity, what is leading the way? What is really the focus by investors? Banks. Banks are definitely one of them there, and the Russell 2000. So let's go over to the charts and start talking about this here, because I think it's really important. Here's the S&P 500. If you understand candlesticks, you know that the last 3 days are not good candlesticks. That is not what you want to see if you are an investor, a bull, if you're someone that wants the markets to go higher. If you're one of our customers and you want to know about the candlesticks or have no idea what's going on here, I did 3 very simple classes to bring you up to speed on that. One of the things I love to do is teach. So I'm always trying to teach our customers more and more and more while we handle the long-term retirement stuff there. So S&P 500 continues to look weak. Why does it continue to look weak? The bank stocks. The banks cannot find any interested buyer. You know how like you put a car up for sale and nobody calls, they don't want to buy your car? That's what the banking stocks are going through right now. You got increased competition, really, really increased competition. Look, I see what Robinhood's doing. Everybody's been emailing me all day about the checking and savings account. Is that a good deal? What's going on there? How do they make money? You know, we'll talk about it, but it's one of those things like it's a highly competitive business right now to attract the dollars. They're willing to pay more so they can go give it to other people. Well, these big, the big banks anyways. And so right now, what's that do for margins? How does trade work in the future? How does the Fed raising rates or neutralizing rates affect them? Remember, rising rates was good for banks. Now that we all think, or the Fed has sort of indicated, we're there, we've raised rates as far as we want to go. Now what, right? So there's this sort of unknown in the banking sector, and that is leading the way to the downside here for the markets. Remember, if you don't have a rally in the banks, you don't have a rally, right? It doesn't exist. So bank stocks down 0.75% today. I want to point out the Russell 2000 down 1.5%. Basically, nothing happened in the Dow and the S&P today, but the Russell falling 1.5%. Remember that, right? So the Russell is down 7.5% in just the last 10 days. S&P's and the Dow are only down 5%. The Nasdaq's only down 4%. So the Russell continues to lead the way. If you take anything from what we've talked about here over the last couple weeks, it's that the Russell 2000, the sort of leading indicator, well, the leading index for the markets, for the economy, continues to show weakness there. Not a good sign. Add to that you just don't have the banks, and you really don't have a great recipe for anything good to happen. Now, the Fed could change all that next week, so don't go too far, because we'll be covering that, of course. Retail sector, that broke to new 52-week lows today. It's down by about 6% on the year. It's a little extended in the short term. You bottom pickers out there, start with the grumblings of should I buy retail stocks, things that have sold off a little aggressively. It was more of a broad-based sort of sell-off today. It's down 10% in just the last 10 days there. So you get the idea of how far and how fast that sector has moved. The oil, well, this is the price of oil that you're looking at here, up about 3.5% on the day. The Saudis basically just said, hey, we might even cut our exports to the U.S., cut our oil exports to the U.S., and the goal there being to hopefully dry up some of what the U.S. has here and sort of reduce the world's oil supply. That was helpful. It did boost prices there, 3.33% on the day. It's still stuck near the lows. You can see it. Anybody that looks at any sort of chart of any kind can look at that and go, well, that doesn't look good. That's sitting near the lows there. So not good there. Look, transport's one of the weaker spots today. You did not have this broad-based attempt to buy. It continues to be choppy. You continue to have investors say, well, I'll leave my utility positions. I'll leave my healthcare positions. But I'm going to take money that did not perform this year from the banking stocks. I'm going to take money that did not perform here in the transports. I'm going to take money from tech that has underperformed. I'm going to take money from the Russell 2000. I'm going to take money from oil, from energy, from transportation, oil transportation companies. You get what I'm saying here? People are moving money into that area of the market. And so the transports continue to be lower. However, if you like technical patterns, I'll just point out, I drew a quick line here, and if I zoom out, you can see the sort of, they call it near term, but I'd say more midterm support here in this area. If you like the transportation stocks, if they're going to bounce, this is sort of the area where you want to see them bounce. Almost to the dot, you could see them start to buy that today. Also, in the very, very short term, over the last 10 days, it's down 10%. 10% tends to act as at least a temporary support. So you've got 10% in the last 10 days. That's sort of easy to remember there, hopefully. Sorry, transports are now down. They finished down 1.5%. They're down 11.5% in the last 10 days. So from this high, basically, if you're following along on the screen there. Okay, let's cover a few stocks, and then I'll let you guys do your thing. General Electric, 7.33%. Oh, it was up 10% earlier. So General Electric both got an upgrade today from J.P. Morgan. They kept their price target at $6, but they upgraded the stock, saying that basically this thing's about to start turning. At least that was their assumption. They also announced that they were going to spin off their software division and call it the Internet of Things division, right? It's going to be completely separate. $1.2 billion in revenue is what they do already. But here's the thing. They're basically just shifting from a balance sheet to a new balance sheet. There's nothing new there, right? They didn't like all of a sudden get a contract, get some new revenue, have some new business. They're just moving one business off the sheets to another area of the sheet. So that, as people digest that sort of, the details of that news, I think that's why you probably see a little sort of sell-off there. I don't know. We'll probably keep talking about it. Apple added 1% on the day. They're going to spend $1 billion, right? $1 billion just north of Austin to build a new campus. I thought it was sort of interesting how they didn't make a big deal out of it, right? They just kind of said, we're doing it, right? This is what's happening. I think that will be more accepted by the people of Austin and North Austin, or north of Austin, since they're not like going to Austin and saying, hey, how much are you going to give us if we build a headquarters? Hey, Florida, how much are you going to give us? Hey, North Carolina, like Amazon did. Remember that game they played? So if you watch the headlines there, when Amazon's having these local meetings, people are pissed. There's going to be a lot of arguments there. So technically speaking, you got to still have that temporary bottom from that reversal. This is an important technical reversal here, back here on Monday. That is a popular candlestick pattern. It's a popular technical pattern overall, and so far those technical traders are correct. It's holding. It hasn't done a whole lot, but today another 1% on that one, so looking good there. What else can we cover for you? CocaCola downgraded on the day, but finished up 0.5%. Also one of the better performers in the consumer staples sector, so I don't really have anything bad or good to say about that one. The analyst was concerned about some of their changes maybe affecting their growth prospects going forward. I didn't really read it. I'm sorry, to be honest with you. Under Armour, another 6% lower. Remember, they didn't disappoint, but they didn't impress anybody at their investor meeting yesterday. Down back under the 200-day moving average. Still one of the better performers in retail, but you've got the falling knife there. Do you buy the falling knife? Do you like the falling knife? Delta is not that. There it is. Delta back below the 200-day moving average as well. Lost 5% on the day. They're doing well, right? But they're not doing as well as Wall Street would expect it. So for 2019, their growth prospects were around 4 to 6% as far as revenues go. We were all expecting closer to 6%, so they sort of lowered that. Interestingly, I thought this was cool. Delta said they're going to increase seats per aircraft by 2% in the next 4 years, as well as offer more premium products. Do you ever notice how the airlines are always just behind the economy? Like, they're going to increase the premium stuff right now when everywhere else, Nordstrom, Tiffany's, right? Look at people are not spending money on premium stuff. So you notice that? So the next 4 years, when we could slow down here in the overall U.S. and everything, now they're going to increase. Now they're going to offer. I don't know. It seems weird. Something smells like higher baggage fees there. I don't know. What do you guys think? And lastly, not stock related, but did you see in California, they want to tax your text messages. So look, part of your phone bill, you pay some taxes in there to help those that are quite poor have phones, have access to phones, emergency phones, contact phones, things like that, cell phones. And so in California, they go, let's tax the text messages, but as a monthly fee. We're not going to go ahead and say, well, if you make this much, then you might pay a little bit more. Essentially, they're just going to charge you a monthly fee, and that money is supposedly going to go towards helping people afford phones that can't afford phones. However, we already do that. So it just boggles my mind. What are you guys doing over there? Do you guys just sit around and find ways like to make up new taxes? Oh, that would kill me. That would frustrate the daylights out of me if the state that I lived in was always finding some unique way to tax me. Whew. That's crazy. Anyways, that's all I have for you there. What do we have? Are banks a good buy for you discount seekers? I can't actually tell you whether to buy banks or not. I can say that I did a video earlier this week on the Doe Show about if you were to buy banks specifically, how could you go about doing it in a smart way rather than just say, Goldman Sachs, right on support, let's give it a shot. We're going to talk about that one later in the Wine and Wealth class. Mixel's got some good points there on the whole Robinhood thing. Look, it's an investment account, right? So you got companies in that space making that push. You wonder if Dustin would even comment on Robinhood. No, I don't mind at all. Actually, I tell our customers, if you like doing your own investing and you're really small, right? So we'll handle your retirement, we'll handle all that stuff for you, your 401k rollover, all the slow and boring stuff. I love it. I will geek out on that, make sure it's doing what it's supposed to. However, if you like to buy and sell stocks, but you don't have $20,000, $30,000, $40,000 in money to do that, then Robinhood is really one of the better places to go for you because they don't make any money. I can tell you for a fact that their investors are getting really frustrated with them and want them to do something to make money. That's probably why they're making some of these new pushes here. But the idea is if you're small, you have to use them, right? couple months ago, they opened 1.2 million accounts, but the average account balance was less than $1,200. So that's a great place to start. As you get bigger, there are many options that are much better than Robinhood. They're not free, but when you reach a certain level of buying and selling, and if you're an active trader, you can't do that stuff on Robinhood. So it just depends on who you are. I have no problem with the company. I actually love that there's a place that people can go. And like our class tonight on Wine and Wealth, we're going to talk about active trading, right? So it's not what I'm doing for your accounts, but people will now know, hey, I've got my little Robinhood app. I just like buying and selling, staying engaged, a little GE here and there, a little Apple when I feel like it, a fraction of a share or something. I love that. I will never discount, because if you are engaged, you will ask questions. If you ask questions, you will learn, and if you learn, you'll make better financial decisions. So I'm 100% for it. Now, their checking and savings account, right? I mean, isn't that kind of interesting? I think they just launched the sort of waiting list, if you will. Can we talk about the inverted yield curve? For us new investors, what does it mean? Yet there is no inverted yield curve in its traditional sense. So if it happens, and as it gets, it's got to be much closer than where we're currently at, yes, we would talk about it. For you new investors, it means not much for you other than the possibility of a discount. If you're younger, it doesn't mean a whole lot. You don't focus in that area of the markets too much anyways. So, Christian, the short answer is it could become more of a conversation here and more of an educational piece, but for now, we're just not there yet. The media likes to make a bigger deal out of it than it is at the moment. Yeah. Okay, I tried looking, but it seems, oh, you guys doing the research there? Yeah, I'm not gonna say go for it or not do it yet. I don't have any more information than what you guys have. I just happen to kind of keep track of the industry and see what's going on there. Mixel's getting a feeling that this market just wants to go lower. Was I good enough at hinting at that earlier in the show? Did I point it out good enough to let you know how I feel? Anyways, this is not an opinion show. We're here to help you with the sort of daily goings-on in the markets. If we're helpful in some way, hit the subscribe button. If you're one of our customers tonight, Wine and Wealth, don't forget, you can always click that link, by the way, to watch the replay. I'm also going to cover a few other things, and of course I'll stay as long as you guys will have me to answer questions or anything that I can for you in the meantime. You guys enjoy the rest of your day or evening, and we'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.